Now, for a look at the macroeconomic environment, we're joined by Babatunde Obaniyi. He's a principal associate in mergers and acquisitions at UBA Capital. Babatunde, it's great to have you on the show. Now, of course, we all know that the MPC decision came out this week. Did the decision meet with your expectations, first of all?
Thank you very much for having me this evening, Didi. The decisions of the MPC was pretty much in line with our expectations. Because if we look at the main reasons why we saw the spike, I mean, when the MPR moved from 9.25% by 275 basis points to 12% towards the tail end of 2011, there were two main reasons cited by the CBN. One is the pressure on the foreign exchange and the inflation rate. Having seen the inflation trend downward this year from January to February to March, we will have expected to see a cut in the MPR if that trend has been maintained in April. But unfortunately, we see a 50% basis point increase in inflation rate. So it was pretty much expected, and as you can see, that even the market agents have pretty much priced that into pricing, and that's why you didn't see much of an impact on the financial market.
Now, in your view, what are the macroeconomic implications of keeping the MPR unchanged?
Well, they're not far-fetched. On the positive side, we believe that the CBN is trying to target a single-digit inflation rate, which is in the best interest of the economy as a whole, and also to have a stable exchange rate in as much as we're an import-dependent economy. But also on the flip side, we need to also balance it with the implication of this credit growth. I mean, for the past few months that this MPR has been at 12, we've not seen much of a growth as we would have expected, and also that could have also been the reason why we have not seen the economic grown at the rate that we've grown in 2011 at beyond 7%. We've been growing between the 6 and 7% point. So on the flip side, the major challenge for us is how does this affect the credit growth? But on the positive side, it's good for the inflation and the exchange rate.
Let's talk about AMCON's bond refinancing plans. What is the direct impact of this plan on money supply and inflation?
Well, if we listen to what the CEO of AMCON and the CBN governor has said, it's clear that the redemption of the AMCON bond, I mean, the ones that are due by year end of 2013, it's about 1.7 trillion naira in face value. And it's going to be a combination of cash and treasury bills. So it's until we get a clear sense as to what is going to be the proportion. You know, we need to know, is it going to be 40% cash or 60% cash? That's when we will have a clear sense of what this is going to have, the impact it's going to have on monetary supply and inflation. Now,
very quickly, let's talk about the M&A space. There's news that South African bank First Rand is keen to acquire one of the AMCON-owned banks, perhaps Main Street or Keystone Bank. So could you give us some more detail into that? And if there's any other news, perhaps linked to the AMCON sales coming through?
Well, for M&A space for M&A activities in the banking space, it's pretty much what has been in the news, because some of this information you have are sensitive to the market, and you have to be conscious of what you release. But like I said, the Nigerian banking sector is looking really robust. It's looking very active and enticing. The last ratio, we have about 46% of the population still unbanked, and we have seen a lot of growth in loan, in assets, in earnings of this bank, which shows that the potentials are there for them to grow. And pretty much in line with our forecast that we're going to see the inflow of foreign banks coming to take their position, to take advantage of the growth that we expect to see in the coming years.
Okay, Babatunde,
so we expect that to happen.